Hey, what's up, my friend? So, in today's training, I want to share with you, right, a trendline trading strategy that you can use to profit in bull and bear markets, right? So, here's the breakdown for today's training. Number one, I'll share with you the secret to drawing trend lines that nobody tells you. It's a simple 3-step technique, and I'll share that with you. Then we'll talk about the trendline bounce strategy, the trendline break strategy, and finally, right, we'll talk about how do you actually find higher probability trading setups, right, with trend lines. Okay, so that's what we'll do today. But first, right, if this is the first time you're watching this video, or the 10th time or the 100th time, doesn't matter, give me a thumbs up and subscribe to my YouTube channel. The link is below. Just click subscribe, and this way whenever I publish a new video, right, you'll always be updated. So do it right now. Get going. Okay, how do you draw trend lines, right? First thing, right, first is that you want to zoom out your charts, right? You want to see the big picture in the grand scheme of things. Number two, right, for me, right, I find that drawing your trend lines, right, from right to left, it's kind of easier comparing to drawing from left to right. So there is no right or wrong to this, but just that I find that if you draw from right to left, right, it's easier for me, and I'll explain why later. And once you've done it, right, you want to connect the most number of touches that includes both the body and the wick. It doesn't matter whether it's touching the body or the wick. As long you can get the most number of touches, right, just do it. Right, so let me explain. So this is over here, Aussie yen. So remember, first thing, right, we talk about zooming out, seeing the big picture. So general guideline, you can zoom out 10 times, right? So just, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So about 10 times, right, to kind of see the big picture. So at this point, right, you can see that Aussie yen, right, I want to draw the line, okay, trend line over here, from right to left. So traditionally, how people do it, right, and it's not wrong, is they draw it from left to right, okay? Then that's one line, okay? Then sometimes they might draw like this over here and they realize, oh, this is broken, right? So let me just remove this. So I find that it's easier, right, to draw from right to left because there is less of this type of corrections. So let me share with you how I would do it, right? So right to left, click your trend line tool. This is the rightmost obvious swing high, and fire back all the way to the left side. So at this point, right, what you are trying to do is to get as many touches as possible. So this isn't a perfect by any means, so I'm going to do some slight tweaking as of right now. So you can see that this high is being touched, that's great, but somehow this one is not touched over here. Okay, so what I could do is I could bring this one lower over here, and at this point now I touch this level. This one is like a kind of like a false break, but still a valid touch if you ask me. This also, right, is still a touch, and this is a touch as well. So one thing to know about trendline is that just like support resistance, just like any other tool, right, that you use to define an area of value, we are dealing with areas on your chart. We are not dealing with a specific level on your chart. So you got to treat this trend line as an area, something like this, right, where you can, draw it like an area. Okay, so this is how you should treat trend lines, as an area on your chart. And a quick tip for you, right, if you want to visually, right, help you look at it as an area, what you can do is you click on this trend line, Control C, Control V. Now you have another parallel line, right, that you can attach to it, right, and treat it like an area. And for this parallel line, what I will do is I will try to, touch it at the extreme ends of this trend line, which is this one over here. So now if you look at it, right, this trend line, right, you can better visualize it as an area. And that's how I would go about, drawing trend lines. And if you want, right, you can even press Control C, Control V to have another line parallel to it and treat it as an area. Make sense? Okay, so another example, Euro Yen. Okay, so as you can see, over here, again, I want to draw it from right to left. Trendline tool, this is the extreme highest point at the right side. Fire it all the way to the left. Okay, again, it won't be perfect the first time round, so I'm going to make some tweaks to it. So at this point, right, clearly this part over here is not involved yet. So let's see if I can, try to get it involved. If I were to bring this down, it won't quite make sense because it will invalidate these highs. So I'm going to let this remain here. Okay, so what I'll do is possibly bring down this one lower and get involved this level, and this one over here as well. So you can see that I have now tweaked my trend line from this highs over here, okay, because if I were to leave it at this highs, okay, it's not wrong, okay, but I like to encompass, right, I like to give the more recent swing highs the so-called higher weighting to it. It means I like to give it preferential treatment. I want to get them involved, okay. So in this case, right, what I'll do is that since I could shift this down, right, and get involved this two levels here, which is this one here and here, right? This is how I would draw this trend line for this particular market. And again, right, it doesn't mean that this is the only correct trend line, right? Because as you can see, right, the longer term trend line, right, would be this one over here. okay, and it kind of like point towards a similar level, and if you project forward in time, it will be around the same level as well. So again, as mentioned, I would rather give weightage, right, to the more recent swing levels. Okay, another way you can draw your trend line again is to connect these two out, this two trend line out, right, and you get something like this one over here. Okay, there will be another trend line over here at this point, right? So yep, this is also another valid trend line. In fact, if you draw from right to left for this one, you'll start from here to here, and then you extend this one all the way down, okay? But I'll be more concerned with the recent price action, so I will just leave this trend line over here, and this will be the one that I'll be watching at, right, as of right now, okay? So I give more weightage to the recent price action, and this is how I would draw this trend line at this point in time for Euro Yen, right? Because I, again, as mentioned, I give more weightage, right, to the recent highs, the recent lows, the recent price action. And just one last example again, right? New Zealand against the Swiss franc. Again, same technique, right? Zoom out, okay? Plot it, right? For me, I like to do it from right to left. So again, trendline tool, from right, this is the extreme highs. Go all the way to the left and try to get as many touches as possible. So at this point, you can see that, okay, again, this is quite a number of touches, but it really invalidates this entire portion over here, which is the more recent level. So what I'll do is I will adjust it, right, and take into account the recent level. So I'll possibly do something like this. Probably something like this, okay? So you can see, right, if I were to take this into consideration, this highs, okay, and if I were to draw it like this, right, at this point, I only have like kind of like 2 points, okay? But if I were to forego this most recent swing high, okay, let's say I were to do it from this highs instead, okay, and I connect all the way back up here over here, okay, and this highs over here, right, and I project this down further, I could get more number of touches compared to the other approach that I just done earlier. So for this approach, right, I get 1 touch, 2 touch, 3, I'll take this as 4, okay, so this is the most number of touches, right, body and wick. So I will go with this particular trend line instead of this most recent one here. So if you want to draw this, I only have like 1 touch, so it's only 1 here and 2 here. Okay, if I were to connect this one here into this manner, okay, you can see that there's a lot of invalidation points that, disrupt this trend line. So I'll remove this, right, and keep this trend line here at this point in time for this chart. And this will be the trend line I will reference from, right? Why is that? Again, right, it has the most number of touches, right? And that's the biggest criteria when I take into account drawing of trend lines. Most number of touches as well as the taking into account the most recent price action. So if the most recent price action only has 2 bounds of a trend line, whereas if I go further back in time I get like 4 or 5 bounds, I would go back further in time and get the most number of touches. Okay, so this is how I would go about drawing trend lines. So moving on, right, how do you use trend line in your trading? Okay, so let's find out. How do you use this to trade the markets? So this is Aussie dollar. Okay, you can see over here, I have drawn this trend line over here, right? Number of touches, right? 1 touch, 2, 3, 4, and this one over here is the 5th one. So when you trade trend lines, right, it's only confirmed, right, after the market has, bounced the trend line off at least twice, right? So for example, if I were to look at this chart, right, many traders will say, oh, Rayner, look at this, Rayner, the market has bounced the trend line over here, I go short at this point in time. No, you won't, right? Because at this point in time, right, you couldn't even draw the trend line, right? Because this level, right, it has not reversed from this level. You don't even know whether the market, or rather, you can't even draw the trend line because if you look at this, right, at this point in time, you only have 1 point in the market, which is this level over here. How do you know to connect this highs over here when the market hasn't even reacted to these highs? You have no idea that you will draw the trend line to connect these highs. Does it make sense? So you can only sort of like draw the trend line after it has bounced off it twice, after the price has bounced off the trend line at least 2 times. So for this one here, okay, so it bounced once, it bounced twice, then the 3rd time when you draw the trend line, then when it comes back a 3rd time, right, then only then, right, can you decide, right, whether this is an area you want to trade from. Okay, so whenever you trade trend lines, remember, you need at least a 2 test of it, right, to kind of confirm the trend line. If there's only 1 bounce of it, right, it's not even possible to draw a trend line. Okay, so for this one over here, right, how do you actually, trade this, right? So I want you to kind of like just focus on this portion over here, right? So over here, right, when you trade trend line, right, bear in mind that, you're dealing with an area on the chart. You have no idea at which particular point of the area, right, would it reverse from? Would it be, before or after the trend line? So for example, let's say we are dealing with an area, I can actually just, Control C, Control V and say that, hey, we are dealing with this area of trend line on your chart, this area. Okay, this area. The question is, right, hey Rayner, how do I know which part of the area the price will bounce from? Would it be at the earliest point of the trend line, or would it retrace deeper, right, and reverse from here? Well, the thing is, you don't know. You never know, right? That's why you let the price tell you, right, when to get in, right? You let price be your guideline, right? And that's what we will do down here, right? So for this case, right, in this instance, right, the price, right, has given us clues, right, that the market is about to reverse lower. Came back in once, give you kind of like a shooting star pattern for those of you who are familiar with candlestick patterns. If you're not, I have one training video in the description. You can check it out. Over 1 million views, right? So do check it out if you are not familiar with candlestick patterns, right? This is one price rejection. Second candle, market tried to close higher, and this third candle, right, it formed a bearish engulfing pattern telling you that the sellers are in control. Fourth candle over here, right? This is another form of price rejection as the buyers try to push the price up near this highs, only to get rejected and closing near the low. So at this point in time, right, there are multiple price rejection, right? Multiple price rejection at this area. So at this point, right, if you see multiple price rejection at this swing high, at this area of resistance, right, shown by the trend line, this is a sign of weakness, and you might want to consider selling, right, in this market condition. Where do you sell, right? What you can do is just place a sell stop order below this swing low, right, and to get you trigger, right, towards the short side in this market, right? So this is one type of entry trigger, a pattern, right, to get you to short this market, right, using trend lines. Because remember, right, you have no idea at which part of the trend line the market is going to reverse, whether the early portion of the trend line or the later portion, right, where the price does a false break of the trend line and then reverse lower. So since you have no idea, right, you let price be your guideline. You watch the price action, you look at how the price gets rejected, right, to time your entry. Make sense? Another one, right, Brent crude oil. Okay, so this time around we'll have a look at the 8-hour time frame. So again, same thing, right? So at this point, right, if I just go over here, at this point, there is no way, right, you are going to buy it over here, right, because the trend line is not even formed yet. Okay, so likewise, at this point, it's also unlikely you'll buy over here. Why is that? Because if you think about this, right, when the price is over here, right, how you would draw this trend line at that point in time would look something like this. Okay, so maybe you could buy over here, maybe, right, but you can see that from the start, right, where you draw the trend line, and maybe after 100 candles later, your trend line will go through different iterations and variations. So you constantly tweak it, right, to adjust it to the current state of the market. Bear in mind, okay? So at this point in time, right, the current state of the market, how I would draw this trend line is like this. All right, and again, you can see that price again bounce off once over here, break above this highs, came back, bounce a second time, break above this highs, bounce a third time, right, break above this highs. Now we can look for, let's say, if there's a fourth bounce. At this point, okay, you have a price rejection, right? Notice over here, the price got rejected by this trend line. Again, this is not a line on your chart, even though it's called a trend line. I wish I could call it trend area, right? Because if you think about this, right, your trend line could also is an area on your chart, and you just have no idea, right, which part of the trend line it will reverse, whether it be the early portion of the trend line or the later portion. So that's why, again, you let the price be your guide, right? In this case, right, the market did give you a signal. You can see that strong selling pressure into this area of value, the trend line. If you know your simple support resistance, right, you can see that over here, this is an area of support, right? Previous resistance becomes support, and is back down here into this area of support as well. So you got multiple confluence factor, right? Something I'm going to talk about later, right? But I can see that you got multiple factors coming together: trend line, support, price rejection, right? This is like in the form of a bullish engulfing pattern telling you that the buyers are stepping in. So these are, numerous factors coming together, right? Signaling to you that, you might want to consider buying in this market condition. Okay, so again, right, this is how, you can use trend line in your trading, right? Looking for that bounce, looking for the additional confluence factors to time your entry. Okay, so now some of you might be thinking, okay, Rayner, right? I understand candlestick patterns, but sometimes, right, the market, it will not give you a clear, obvious candlestick patterns. It might not form a shooting star. It might not form a hammer. It might not form a bullish engulfing pattern. It might not be obvious to your eyes, right, that there is price rejection. So what now? How do you enter the markets, right? So this is what I want to cover right now. So for example, if you look at this is the 10-year Treasury note futures. So you can see that over here, I just zoom out a little bit, right? And you can see that at this point, right, this market is in an uptrend, right? And for this particular technique, right, I like to overlay the trend with a moving average that the market respects. So this is a healthy trend, and in a healthy trend, the market tends to find support at 50 MA. Okay, so you can see over here, the market tends to find support right at the 50 period moving average. Bounce once, twice, here's the third time, and here's a kind of like a fourth time. So here's the thing, right? Again, same concept as the trend line. You need a minimum of 2 tests, right, before you can confirm, right, the market is respecting this particular moving average. So recall I said this is an area, it's not a line. So in this case, right, market didn't retest the 50 MA at all, right, before it continues higher. So now here's the so-called tricky part, right? Rayner, right, at this point, right, Rayner, you might be wondering, hey, Rayner, at this point, right, I don't really have any signal to enter the trade, right? The market just came down lower over here. There's small bullish candles, and then it starts to just reverse up higher from here, right? There's no, strong price rejection. There is no bullish engulfing pattern. There is no signal to enter the trade, Rayner. So what now? Well, this is where the technique called the trendline break comes into play. So what you're doing here in this instance, right, is to use the trend line, right, as an entry trigger to enter the trade. So for example, the previous section, what we were discussing is that you were using trend line to help you define your area of value, right? And then time your entry using a price rejection, like, reversal candlestick patterns. But for right now, what we're doing is that we are using the trend line to time your entry. And how you'll go about doing it is that you want to draw the retracement trend line on the pullback. Okay, so in this case, you can see that you can draw a mini trend line connecting from this highs to this highs, and you can just draw the trend line down. If you have difficulty doing it, a tip for you is just go down to a lower time frame, like for example, the 8-hour time frame, right? And you can see the market structure, right? It will be clearer to draw that trend line. Okay, so let me just show it to you on this time frame. There you have it, the 8-hour time frame, right? This is the same trend line over here, and you can actually adjust it better to like this. Okay, so at this point, right, this is how you draw the trend line on this 8-hour time frame. The price action here is clearer, and you might want to consider just going down one time frame lower to draw that trend line. Okay, so anyway, back to the daily time frame. Okay, so what you'll do, right, again, is over here, you can see the trend line that we have drawn earlier. What you'll do is that you want to go long, right, only when the price has break and close above the trend line. So this is what I call the trend line break technique. When the price break and close above the trend line, then you go long. Okay, so this is very useful, right? Especially if the market doesn't give you any, reversal candlestick patterns. It doesn't show any form of price rejection. This is a technique that you can use, right? The trendline break to help you time your entry into the market. And moving on, another example, euro dollar. Okay, so in this case, right, you can see that if I zoom out the charts, right, euro dollar, it doesn't seem to be respecting the 50 MA. And the reason being is that this is not a healthy trend. This is more of a weak trend where the pullback is much deeper. Okay, so in this case, right, usually in a weak trend, the price tends to either, respect the 100 or 200 MA. So in this case, it's actually the 200 MA. Okay, so again, right, same technique that you can use, right? You can use the trendline break technique. And again, you need a minimum of 2 tests, right, to decide that, to tell, right, whether the market respects the market or not. To tell whether the market to tell whether that the price respects the moving average or not. Okay, so one test, right, price breaks down below this swing low. Over here we have a second test. Okay, so now we know, okay, the market seems to be respecting this 200 period moving average. As you know, it hit down lower from here again. So at this point, right, again, the market came up over here for, I think this is like the 4th test. How you can time your entry again is that, again, you don't have any any form of price rejection. What you can do is you can use the trend line technique that I shared with you, connect it from the swing low all the way up higher, and look for a trend line break. So in this case, possibly, right, this will be the entry trigger when the price, this one here, when the price breaks below this trend line, right, this will be an entry trigger for you to go short. Okay, so a quick tip over here for you, right? So when you trade this trend line break, okay, you want to let the price come close to the moving average, right, before you take the trade, right? So what do I mean by this? So for example, right, if you look at this, right, at this point you know that the market tested once, tested twice, and it actually came back over here, right? And this actually has a trend line break over here. Okay, you can actually draw a trend line, right? Let's be honest, you can actually draw a trend line over here and take this this trade, right, towards the short side when the price breaks below this trend line. But I won't take it, right? Reason being is that, it's still pretty far away from this area of value, from the 200 period moving average. So if I were to set my stop loss, right, it won't be logical, right, if I were to set my stop loss above this highs, right? Because technically, right, I am cutting my trade, right, into this area of value, right? So this is why I would like to, enter my trade as close as possible, right, at the moving average, so I can set my stop loss, right, just slightly above the moving average, right, where it's at a logical location, right? So be aware, right? If the price is far away from the moving average and there is a trend line break, that is a trade that you might not want to take because of the fact that if the market retraces back, pulls back towards the moving average, you'll get stopped out. Okay, so be aware of this. Okay, so hopefully this trend line break technique, right, makes sense to you. And moving on, I want to talk about the how to actually find higher probability trendline trading setups. Okay, so this is what we'll cover right now. So earlier, right, so far what we have discussed so far is that, using trendline and price action to help you time your entries, or using the trendline break, right, to get you into a trade. So at this point, I want to share with you, right, what are the tools that you can use, right, to find higher probability trendline trading setups. Again, the same thing apply, right? When you draw trend line, zoom out your charts. Okay, so I want to highlight you to this point over here, this level. Okay, so I'll just draw this level, and you'll see why shortly why this level, right, is significant. So if you look back, okay, you can see that price bounced once, twice, right, and this is the third time the market came into this level. On top of it, right, if you know simple support resistance, right, you can actually draw support resistance on your chart. And if you ask me, right, I would say there is a area of support, right, somewhere here. Notice price tested support once, twice, then it hugged below it, break down, and now it retests previous support, right, that could become resistance. And this, right, it's a key point over here, and this is a key level on the chart, a key area on the chart. Why is that? Because you have multiple technical confluence coming together. Number one, you got this downward trend line. Number two, you got this area of support, right, where previous support could become resistance. Number three, you have price rejection, right? Look at this price rejection. Multiple price rejection, right? Here and even here, right? Coming to this is a key area, right? And after which the price breakdown. And finally, one last thing, right? If you look at a lower time frame, right, there is also a break of structure, right? So let me explain what this means, right? So if you look at this portion over here, from this up move over here, on the lower time frame, right, you can agree that it's going to be a series of higher highs and higher lows, right? Because that's how the market make a higher move, right? So let me explain that to you, right? So on the 4-hour time frame, you'll see a series of higher highs and higher lows. Okay, so you can see that over here on the lower time frame, right, you have this series of higher lows and higher highs. Okay, so where the break of structure occurred is at this point over here, where the market made a lower high and lower low. So this is a break of structure. So you can see that there are multiple factors coming in. Number one, price is retesting the downward trend line. Number two is an area of value, right? It's at area of resistance. Number three, multiple price rejection on the higher time frame. Number four, a break of structure on this 4-hour time frame. Okay, so you can see that number of confluence coming together that makes this, right, a higher probability trading setup. And finally, right, one last example. Okay, so this is a trade that has not played out yet, so I want to do this kind of like in real time for you. Okay, so you can see that over here, right, this is the chart of a dollar against the Norwegian kroner. All right, again, I will just zoom out the charts, draw your trend line right to left. Okay, so I would do it something like this, right? Quite a number of touches, touch, and here. And on top of it, right, it's not only at this area of value of the trend line, but also at previous resistance, right, that could now become support. So you can see that previous resistance now become support. So what about a price rejection on the higher time frame? Right now, I don't really see much of a price rejection, right? These are pretty small bodied, small range candles, right? And if you look down to the lower time frame, like the 4-hour time frame, there isn't a break of structure, right, at this point in time as well. So what I'm looking at for now, this particular market, is that if there is a break of structure, right, on this time frame, the 4-hour time frame, or you can look at the 8-hour time frame, I'll be looking to buy. Okay, so let's say the market comes up higher, right, and it breaks out, right? Now you have a series of higher lows into resistance, right, and the price breaks out, you have a higher high and higher low. So this is otherwise known as a ascending triangle. So if I get a break of structure, I'll be looking to buy in this market condition. And I'm not buying just because there's a bullish chart pattern like the ascending triangle pattern. No, right, there are multiple confluence, right, coming together, as you've seen earlier here on the daily time frame. We've got the upward trend line, we've got the area of support, right, and finally, if we have an entry trigger on the lower time frame, the break of structure, that to me, right, is a setup, right, that I want to be taking. Make sense? So let's do a quick recap, shall we? So today, right, we talk about how to draw trend lines. Number one, you want to zoom out, see the big picture. Ideally, zoom out your charts 10 to 15 times. I draw from right to left, but you can do it from left to right as well. There's no right or wrong. I like to focus on getting the most number of touches, including both the body and wick, and also giving a weightage, right, to the more recent price action. But between the two, right, I would try to get more touches than the recent price action. So, for example, if I get if the recent price action only give me, let's say, 2 touches, but let's say I could adjust it in a way that I get 4 or 5 touches, I will go with the one with the more number of touches. Then we talk about the trend line bounce, right? How we can actually look to trade off this trend line when it serves as an area of value. We're looking for a strong price rejection, can be in the form of a hammer, bullish engulfing pattern, a shooting star, etc. The bigger the better, the stronger the price rejection, right? The better it is, okay? Trendline break, right? So what if you don't have any form of reversal candlestick patterns? What now? That's where you can use the trendline break technique, right, to serve as an entry trigger to enter a trade. This is especially useful, right, if the market respects a certain moving average. It comes close to the moving average, but you don't have any, let's say you don't have any pattern to go along. The trendline break technique is a useful technique to use. And finally, right, we talk about improving your odds, right, using, multiple confluence factors like, support resistance, a break of structure on a lower time frame, and much, much more, right? So hopefully this training video gives you a good idea, right, on how you can, adopt trendline in your own trading. And before I go, right, if you have enjoyed today's training, then I'm pretty sure you'll also enjoy this particular trading guide that I have for you, the ultimate guide to price action trading. We talk about, candlestick patterns, support resistance, and much, much more. So trendline is just one aspect of price action trading. We will also cover the other aspect in this guide over here. You can download it for free. Just click this orange button and I'll send it to your email for free. So with that said, right, I have come towards the end of today's training, right? If you've enjoyed it, hit the thumbs up button and subscribe to my YouTube channel. The link is all below. And if any comments for me, right, if there's any topic that you want me to cover in my future video, right, leave it below, right? I'll have a look at it, right, and I'll do my best to help. So with that said, I wish you good luck and good trading. I will talk to you soon.